Hello guys, welcome back to a new episode, RALLYTOP Investing 3.0 SMC Masterclass here. Now, are you interested in actually trading the market and become consistently profitable in 2025? If that is your goal, then you need to pay attention to this video and stick with me to the end, because I'm going to take you through how you can take advantage of the 4H time frame candlestick and combine it with the 15M fair value gap and have a high probability trade setup. This strategy can give you 75 to 80% win rate. It is not a set in stone strategy. When it comes to trading the financial markets, you should know that there is nothing that is set in stone. But the only assurance I can give to you is that if you follow the rules, you will come out profitable 70 to 80% of the time. Okay? Now, how do you go about using this strategy? Number one, you will need to observe the behavior of price on your charts using the 4H as your higher time frame. If price, for instance, was coming down and has printed this bearish candle as the last bearish candle, and as you can see, the psychology behind this bearish candle is such that the sellers were in control to this point, and all of a sudden the buyers jumped in and pushed price aggressively to this point, even though the sellers closed at this point but the distance the buyers have covered significantly shows that the buyers may be in control, and the confirmation is this next candle. Once this candle closes above the high of this previous bearish candle, that is your signal that the buyers are in the market right now. And therefore, what do you want to do? Now, when this candle closes, as soon as this candle closes on the 4H time frame, you will need to scale down to your 15M. Please understand the time frame combo. Scale down to the 15M. And what are you going to wait for on the 15M? You are just going to wait for a fair value gap. Okay? The first fair value gap after this candle had printed on the 4H. On the 15M, the first fair value gap is what you should consider as your high probability entry zone. Okay? When we get to the 15M time frame, I'm going to show you what you are to do. But first of all, I want you to observe what I'm telling you now. These candles must be found on the 4H. So that is the first one. And as the candle continues to go higher to break the high of the previous bullish candle, you continue to do the same thing until there is a signal that price may be about to reverse, just as the signal you found here. Okay? Now, number two, if you find a candle like this that takes out the high of the previous bullish candle with a candle wick, it's still the same thing. You can still go down to your 15M time frame and follow the same steps. It will give you the same results. Okay? Now, the only time you don't want to take a trade is if this candle, for instance, does something like this. As you can see, this candle is inside of this high and low. So once you have an inside candle this way, you do not need to take any trade based on the inside candle. All right? The same thing with the bearish structure. You have price coming up and printing this candle, and then the next candle closed below this very bullish candle. As soon as that happens, it gives you a signal that the sellers may have come into the market and they have pushed price lower to close below the low of this bullish candle. Okay, so once this 4H candle closes, what you want to do is to scale down to your 15M and wait for the first fair value gap on your 15M, and that will become your high probability entry zone. I'm going to show you all of that on the chart, but I just want you to understand this first, and therefore you will continue just like so with the next candle and the next candle, except where the next candle now, okay, forms an inside bar. Anytime you find the next candle forming an inside bar, all right, then you don't need to take any trade right there. I hope you understand what we're trying to say. Please try and understand. Now let me take you to the live chat because I don't want this video to be long. Let me take price out from here so it can be okay. So now you can see that price was coming down with strong momentum bearish candles, and then printed this low, and then this candle took out this previous low and then closed above this bearish candle. That's the signal you want to see. That is trying to tell you that this bearish candle was just simply pumping price by the market makers, okay? And now the bulls have stepped in to take control, and so they push price to close above the high of this previous bearish candle. That's all you need. Once you find this, you must wait for this 4H candle. This is the 4H time frame. Wait for the 4H candle to close. Once it closes, okay, you will need to scale down to the 15M. This is your 15M, okay? This is that 4H candle. This is where it stopped. And now, where is the fair value gap here? Now, the first fair value gap here is this one. This candle's low is not touching this candle's high. I hope you understand what is called fair value gap. Fair value gap is a 3 candle formation, 3 consecutive candle formation, where the middle candle creates a gap. Okay, let me show that to you. Look at candle number 1, candle number 2, candle number 3. As you can see, the high of this candle number 1 is not touching the low of candle number 3, leaving this gap. So this is the gap you want to trade. But when you are trading this gap, the first thing you need to do is to make sure that the high of this candle number 1, remember this is candle number 1, candle number 2, and candle number 3. So this candle number 1's low will be your stop loss. Okay, it will be your stop loss, and then you will target minimum of 1 to 2. In fact, I will advise that you target 1 to 3. Okay, 1 to 3. So with this in mind, this is the 15M. Let's continue to play price and see. So as you can see, price is already moving in our direction. It tapped into it and then move higher. That's the first example. Target minimum 1 to 2. But I will advise that you always go for 1 to 3. You are going to take some losses in the market. It does not really matter. But at the end of it all, you will come out profitable. Okay? So now, let's get back to the 4H and see another opportunity. Very simple strategy, and then you'll be amazed at what you get. Now, this was the first candle we treated. Now we want to move to this next candle, because this next candle has closed above the high of this previous bullish candle. So we want to work on this next candle. Okay, so now let's get, this candle has closed now. Let's get to the 15M. Now this is the 15M now. Okay, this is where the 4H candle has ended. So where is the fair value gap here? Well, as you can see, we have this fair value gap right here. I told you, look at the high of this candle number 1 is not touching the low of candle number 3. Can you see that? So leaving that gap there. Now, but remember, this candle number 1's low must be your stop loss. Just like so. That's your stop loss. Give a buffer Let's continue to play price. So as you can see, we have been tapped into the market and price is moving higher. Now let's get back to 4H and continue to see whether we have another opportunity to enter the market. Now remember, the first 4H candle was this one, the second one was this one, and now look at this third one. We want to work on this one too. So let's take price out from here. So we want to work on this one too, and let's see how it goes. So now that this candle has closed, the 4H candle has closed, let's scale down to our 15M and see whether we will have any fair value gap. Okay, this is the 4H candle where it has closed. Now, where is the gap here? Look at this. This candle number 1, candle number 2, and this candle number 3. This is not the candle number 3. This one it is. Okay, so now the high of this candle number 1 is not touching the low of candle number 3, leaving this gap. All right, now remember, your stop loss must be below this candle number 1. That's where your stop loss should be. All right, all targeting 1 to 2 minimum 1 to 2. Now look, if we framed this trade, we would have made so much. Look at this. Look at this. Let me just frame it for you to see. Okay, that's the first trade. Second trade, we want to see whether all will go in our favor. Second trade is this one here. Okay, roughly 1 to 2 there. So now we are on trade number 3. Let's play price and see. Okay, so as you can see, price is also moving in our favor. All right, simple strategy, guys, simple. So this one also you would have targeted 1 to 3. Simple strategy. You don't need to stress yourself. So 1 to 3. Where is it? It's already 4 hours. We want just 1 to 2 or 1 to 3. Let's see. 1 to 2. Somewhere just around there. That's 1 to 2. All right. So you can see that, guys. Simple, straight setup. Let's continue to play. As you can see, all the 3 have hit our take profit. Okay, all the three trades have hit our take profit. We can continue on and on and on like this. Just go back and back test on this strategy, and then you'll be amazed. Just go back and back test. Don't take my words for it. All right, don't take my words for it. Simple strategy for 2025. If you are new to our channel, please don't forget to subscribe and turn on the notification so that anytime we publish a new video like this, you'll be notified about it. And if you haven't joined our free Telegram channel, please do so just immediately, because you will have lots of valuable contents right there. And if you want to join our VIP community, all right, to learn more on how to become profitable in the market in 2025, the doors are open. You can join. All right, guys, I see you in our next episode.